Hey guys, welcome to this video. Thanks for joining me. Now in this video, I'll be talking about the Bank of America Advantage banking account, especially if you're a student. Now, before we go on, my name is Stephen Ojo, and on my channel, I talk about saving money, investing money, and how we can create, passive income. And also I try to share information like this so that you become informed and you can make better decisions as you go along in your journey of building wealth. But now one of the things I found out recently is banks are often luring students to open accounts with them. And that's a good thing because as a student, you are generally not in a situation where you make a lot of money. And because these banks are offering you, an opportunity to start saving money and start maybe investing and all of this, they will tell you that, well, to open an account, you're going to have zero maintenance fees. You're going to have like zero minimum balance and things like that. And this is great, especially like the Bank of America Advantage banking account. For example, as long as you're a student and you're in college or in high school or you are in a vocational program, you can actually open an account with Bank of America with very minimal amount, and also you won't be charged maintenance fees, which is great. But here's the catch. As you go along in your journey in life, you start to need other things. So let's assume that you're 17 or 18-year-old going to college. You probably haven't had an account before, and now you're going to open your own official account. You're opening it to either save money and also have access to a debit card. Now, over time, your expenses starts to increase. And over time, you think about, well, I need to start building my credit. Then you go get a credit card. Now, before we go on, you need to understand that a third of every student has about $1,000 in credit card debt. So as you go along in your education, realize that you need to build credit. And that means that you need to get a credit card, which is generally one of the first ways most people build their credit. Now, this is good. But however, you go get this credit card and then you start to spend more than you make. As we know, students are often either working part-time or some of them are not even working at all, which means you shouldn't be spending so much money. But as a student, you want to buy this, you want to buy that, you want to buy the latest shoes, the latest phones, and eventually rack up all these bills. Now they start to charge you about 20% on your debt on that credit card. Although they're saving you money by not charging you like $5 or so on the maintenance fee that they would have charged if you weren't a student, but then they're getting you on this credit card. That's the first part. The second part is as you move on through college, you finally graduate, you get a job and you start working, well, you need to make a direct deposit because your job will need to pay you, which means that they'll pay into your bank account. Most of the time, the average person keeps the same accounts that they had in college all through to their workplace. So guess what? This money goes into this bank. So why does this favor the bank? Well, the thing is this, right? A bank operates on money. The more cash the bank can have, the more money they can lend out to people, and the more money they can make in interests. And that is how the bank makes a lot of money. So the more people that they have that can bring money to them, and the more money they can loan out, the more money the bank makes, and the bigger the banks get. And this is where you, as a student right now, as your future earnings grow and increase, you bring more money into this bank, and this bank is making more money. But at the end of the day, remember the bank they offered you about 4 years of free bank accounts, but you start to pay the price as you then acquire this credit card, and also as you acquire more other things like a house, like other toys or gadgets or personal loans that you may get. Now, the truth is, at the end of the day, is it a bad thing for the bank? No, it's not. But where you need to be informed is that as a student, even though the bank has offered you this great bargain in terms of the options to open an account and also have zero fees, it's a good thing. But remember that as you advance in life, as you progress through life, your choices and the type of accounts that you open should also change. You got to understand that these big banks are not necessarily there to create a relationship with you. Although, yes, they want a relationship through your money, but if things get hard for you in the future and you cannot pay your mortgage or you cannot pay your car loan, they will reprocess it pretty quickly. Unlike some credit unions or other small banks that are able to create personal relationships with their customers. So as you advance in life and as you grow older and as your choices advance and things that you want changes, you need to also make changes to your type of accounts that you have and open accounts that will favor you in the long run. And don't spend money that you do not have, because at the end of the day, you will make these banks even more money. Well, I hope that you found some value in this video, and I hope that you've gained some knowledge from this video. If you have, please give this video a thumbs up. And also, if you have some thoughts or questions, put them in the comment section below. I would love to hear them. The other thing is, if you're interested in some of these videos, please go ahead and check them out, and I'm sure you're going to find value in them. I'll see you in my next video.